Good morning. Welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN AM for Wednesday, November 17th, 2021. And our top story today, federal student loan default consequences. And joining me now to discuss this and a lot more is Betsy Mayotte. She's the founder and president of the Institute of Student Loan Advisors. Betsy, great to see you. Thanks so much for joining us on the program this morning.
Thank you. You too.
Let's talk about restarting these student loans. You have been on our show numerous times talking about the fact that these student loan repayments were set aside, delayed, whatever the right wording is, under the CARES Act. But let's talk about the restart. What can you tell us? What is the restart and when is it going to happen?
Yeah, so due to the pandemic, about 85% of federal student loan borrowers have had their loans on hold and at 0% interest since March of 2020. That waiver has been extended several times, but we know for a fact there's going to be no more extensions. And so it's going to end on January 31st of 2022, meaning that people are going to start being due for payments again as of February of 2022.
So if I'm covered under this restart, meaning if I have a loan, not me personally, but if I'm an individual covered by this, what do I have to be aware of? Do I get an updated amortization schedule? Does that all change? Does it push my payment due dates out? How does that all work? Or do we know how it works?
Well, because they haven't been charging interest, it's not going to increase, the result of this shouldn't increase people's payments and so on. What they should expect is they should already be getting notifications from their loan servicer to remind them that payments are going to be restarting, and also explaining to them the different options they might have available to them in case their payments aren't going to be affordable come February. So what's really important for consumers to be doing right now is to make two things. Make sure your loan holder has all your correct contact information, phone number, snail mail, email, and this can be hard. I'm guilty of this as well, or I should say of not doing this. Open all the things that you get. Open the emails and the snail mails that you're getting from the servicer, because there's going to be some really important information that you don't want to miss as far as deadlines for certain things.
And what happens if I can't pay a loan? What happens if I don't have a job, or my parents don't have a job, or someone who is co-signing on that loan doesn't have a job? What are options available? Can you actually extend out the payments, reduce the payments like you would on a car loan or some other type of loan?
It depends on the loan. So thankfully, federal student loans have a good number of opportunities for relief. There's deferments if you're unemployed. There's deferments if your income is very, very low. Even better, though, is that there's lower payment options. Some of them are based on your income. Some of them are based on your balance and extend the term or do sort of a graduated repayment. So there's usually a repayment plan to fit most people's situations. There's a calculator on our website, freestudentloanadvice.org, and the Department of Ed's website, studentaid.gov, that if you plug your numbers in, it will actually tell you side by side what your payment would be under each of those plans. So to help you figure out which one fits your budget.
Betsy, I think when we last talked, there was a loan servicer that said we're not doing this anymore, and they were going to move people to a new loan servicer. Am I correct? And number one, am I correct in that? And two, what happens if my loan was transferred to a new servicer?
That's a great question. So not only was there one, there's been three. I
missed the other two.
Yeah, Granite State's a servicer that has decided they're not going to service loans for the Department of Education anymore. So those loans are already moving. If they might even be done by now. The bigger news was Fed Loan Servicing. Now they're the PSLF, Public Service Loan Forgiveness Servicer. They announced they were not going to renew their contract, and their contract was due to end in December of this year. But just this week, they announced that they did a year extension, which is good. It takes a lot of the anxiety away from public service loan forgiveness borrowers right now. And then the third change was Navient. Navient has transferred its contract over to an organization called Maximus, which is another contract for the Department of Education. So that's another reason to make sure your contact information is up to date. So if you're one of these accounts that gets transferred, that you get the notification to find out who your new loan servicer is.
Betsy, last question. I think it ties in nicely to what we're going to talk about in the second segment. But what happens if I ignore or don't get these letters, I don't take action, and I don't make my payments starting February 1st of 2022?
Well, that's fraught with peril. What the consequences depend if you have a private loan or a federal student loan. For a private loan, you're at risk of late fees, obviously negative dings on your credit, and ultimately being sued by the lender. Federal student loans, they have a lot of tools at their disposal that they actually don't need to go to court to get. So they can garnish your wages, they can take your tax refund, they can garnish your Social Security, some pretty big negative impacts to your credit and collection costs. So, people say to me, well, I defaulted because I couldn't afford my loan. Well, if you can't afford your loan now, you're really not going to be able to afford it after it defaults when they've added up to 24% of your balance in collection costs.
Yeah. Well, Betsy, I want to take a quick break because I want to pick back up on those consequences. Let's take a quick break. When we come back, we'll talk more about the consequences related to delinquency. You're going to want to stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
Are you stuck with a low credit score? A credit report and score that's causing you to be denied credit or pay higher interest rates than others for the same things? Then do what Terrence did and call Credit Repaired for your free credit evaluation to help restore your credit.
I started thinking about buying a new house, and my score wasn't where I needed it to be. I called and spoke with one of the representatives, and we just had a good conversation, and I liked what he was saying.
Just one call for his free credit evaluation was all it took to start back on the track to repairing his credit.
I'm seeing the deletions and I'm getting the report, so I know something's being done. It does make a difference to me.
All it takes is one call to get started.
Credit Repair has given me a second chance to have a better credit score.
Don't let a low credit score hold you back another day. Do what Terrence did and make the call for your free credit evaluation.
Call 800-819-4152. That's 800-819-4152. Again, 800-819-4152.
Welcome back. We're talking this morning with Betsy Mayotte of the Institute of Student Loan Advisors. Betsy, thanks so much for staying with us this morning.
Oh, my pleasure.
All right, so let's talk more about the consequences. I just want to reiterate, because we eased into the segment break talking about that, there are millions of students who have taken student loans. And for most, it's a great investment, right? You are investing in yourself, your future. but you got to make these payments. What, again, just to reiterate, what are the consequences if I do not make my student loan repayments and they go into and the loan goes into default?
Yeah, so for private loans, if you default, you're at risk of litigation. They can and will sue you and your cosigner, by the way. Many private loan borrowers also have a cosigner that's equally liable for that loan. So that cosigner's credit's also going to be negatively affected. And if the lender should decide to file suit, they very well could file suit against both of you. Federal student loans, the chances of litigation is a lot lower. However, that's because they don't need it. If you default on a federal student loan, they'll add up to 24% in collection costs to the debt. So if you owed $100,000, now you owe $124,000. They can garnish your wages up to 15%, take your garnish your Social Security, take your tax refund, and you've lost the options of taking a deferment or getting on a lower payment option. So if you do default on your loan, it's really important to try to resolve that as quickly as possible.
And let's talk about the credit score. That score is the basis. You'll hear about checking our free credit report, checking the credit report. But if you have, this could ding your credit score, which means mortgages, other under lending opportunities, or borrowing opportunities, I should say.
Yeah, so for a federal loan, once you're 90 days past due, between 60 and 90, mostly for most people it's 90, they start reporting that you're delinquent on the loan. And that will negatively affect your credit. But if you actually default on the loan, that's a huge negative impact on your credit. I don't know if I've ever seen anybody be able to get a mortgage at all if they have a defaulted student loan.
If you go into default, I mean, can you ever get that expunged from your credit report? Do you just have to pay off the loan plus the interest? I mean, I can only recount my experience with 401k loans because I used to administer 401k plans, and to get another 401k loan, you would have to pay off the outstanding loan plus the accrued interest, plus, in order to be able to take another loan. Can you get out of that, what I would call loan default jail?
Yeah, so thankfully under the federal student loan program, there's two ways, well, three if you count paying it in full. There's two ways out of default, and one of them called loan rehabilitation. If you get through that program, they actually remove the default line from your credit report like it was never there, which is unheard of. So that could be really beneficial to your credit. The way rehab works is you make 9 consecutive on-time payments that are based on your income. And then once you make those 9 consecutive payments, they put your loan back in good standing, so it's not in default anymore. They drastically lower the collection costs from that 24%. And they, like I said, they remove the default line from the credit report like it was never there. Now, if you consolidate, that's a little faster. You can generally consolidate out of default in just 2 or 3 months. And that will show on your credit report that you're no longer in default, but it does still show that at one point you were until it drops off after the 7 years or whatever. Yeah. Consolidation does also lower the collection costs, but not as dramatically as rehab does.
So Betsy, no lender wants their borrower to go in default. And there's got to be some recipes here for success. Is the number one ingredient just communication? If you can't make the payments, whether you're borrowing from the federal government or one of these federal programs or private borrowers, just pick up the phone, email, text, whatever. Just get in touch to communicate.
Absolutely. Federal student loans especially. So there's two things. So for private loans, staying in communication, paying what you can, even if it's just a couple bucks a month, that shows good faith and it makes you less of a target for litigation. They don't want to sue you because that's expensive and there's no guarantee they're going to get their money. So for private loans, that's a good strategy. For most of the time, there's some questions about statute of limitations for private loans, and we won't get into that because that's not a legal advice podcast. For federal student loans, 90 to 95% of the borrowers that I've worked with over the last 25 years that have defaulted would not have defaulted if they had just reached out and asked for help. because there are so many different programs available. But they don't reach out for help because either they're embarrassed, they're overwhelmed, or they don't think there's a solution for them. So that's really, really good advice is, reach out and explain your situation and see what can be done to help you.
Yeah, you bring up a good point. I mean, it is so expensive to litigate, to do all these administrative processes. No one wants to pay that additional cost. It makes it unprofitable. And by the way, what you're communicating really applies to other industries as well, whether you owe money on health bills, a car loan, etc. Betsy, we're going to have to leave it there. Really good information, but I think the most important thing, just pick up the phone and communicate. It's really important. Betsy, great to see you. Thanks so much for joining us, and we look forward to having you back again very soon.
Sounds good.
That wraps up this episode of BRN AM. Have a topic of interest, someone you think we should talk to, drop us a line. And don't forget, for all the information in retirement markets, technology, personal finance, so much more, check out today's edition of our daily newsletter, The Morning Pulse. We're back again tomorrow. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.
Are you being audited and do you owe the IRS $10,000 or more in back taxes? Is the IRS threatening to take more of your money? Don't fight the IRS alone. The Tax Doctor is here to help you negotiate your tax bill and reduce your stress. The IRS can freeze your assets and seize your bank accounts, but you can stop these IRS actions. The Tax Doctor will work with you using our years of experience to represent your case to help you get the best resolution under the IRS guidelines. Help is here to deal with the IRS to reduce your stress. We've handled thousands of cases, so we know what we're doing. If you owe $10,000 or more in back taxes, do not call the IRS alone. Call a Tax Doctor now for a tax emergency analysis.
Call 800-224-6439.